Let's welcome yet another guest. Joining us now is Fredy Hoh, the Deputy Portfolio Manager at Ellerston Capital. He's here for the Motilal Oswal Investor Conference. Ellerston Capital itself is a specialist investment manager and has been, Fredy has been managing money since 2002. Ellerston Capital has over $5 billion under management, and Fredy himself has over 11 years of financial market experience, joined Ellerston in 2017, prior to that with Bank of America, Merrill Lynch and Macquarie Capital Advisors. So, thank you very much, Fredy, for joining us. Well, first up, I wanted to ask you about this, inversion, yield inversion in the US, which created a bit of selling epidemic in a couple of days. Is that a worry for you as you sit in judgment of Indian stocks, or is it just something you can ignore?
It's not something that we ignore. I mean, it's part of, obviously, a bigger picture of the global economy. But, I mean, the reason why we like India is not so much what's happening necessarily globally. India is very much a domestic consumption story. And what we like about India is the actual structural growth thematics that exist within India. And the reason why we like India is due to, I guess, three key reasons. Firstly, it's got a really large population size and a very favourable demographics. So, of the 1.3 billion people in India, 65% of those are under the age of 35. So you've got a very young economy, unlike other Asian countries, such as Japan and Korea and Taiwan and China, which has got an aging population. And that's going to be a big tailwind for India in terms of growth in sectors such as consumer, financials, and other sectors as well. And then we're also very favourable about Modi's structural reform agenda. So this is the measures that he's put in place, such as demonetisation, GST, and the infrastructure builds that he's put in place since 2014. And I think that's a very domestic story. It's not so much a US yield inversion story. So there's a couple of reasons why we like India, and it's more domestic related rather than what's happening in the global economy.
Good morning, Fredy. The interesting counter to that is some of the domestic economy-facing stocks are not doing well, for example, auto companies, and they're announcing production cuts as well. Your thoughts on what's going wrong here, and is this actually presenting a buying opportunity in this sector?
I think there is definitely a buying opportunity in the higher quality auto names such as Maruti Suzuki. I think a lot of the issues that's going on right now seems to be regulatory related, and I think they're transitory in nature, in the sense that it will allow, and you're going to have a reset, and we've seen this reset happen last quarter of the previous quarter, and then this coming quarter as well. I think towards the back end of this calendar year, as the reset has already done, you're going to cycle through a lot of those regulatory changes. I think there is going to be a buying opportunity, particularly like I mentioned, in the high quality names like Maruti Suzuki and Aisha Motors. Maruti Suzuki is a company that we've held in our portfolio for a long time, and we like it because it's a steady compounder. It's proven that it can deliver 15–20% earnings growth, and you're paying a fairly reasonable multiple for it at around 20 times. So on a growth adjusted basis, on the PEG ratio of 1 time, I think that's quite attractive. And we'll be looking at an attractive entry price over the next few months in names like Maruti as they rebase. And we take a very favourable view on the 3 to 5 year basis on the auto names.
That was going to be my question to you. You have Maruti in your portfolio, in your India fund, and if you had bought it about 5 months back or 6 months back, you would be sitting in a loss of 50% from those levels. So do you think it's buyable right now, or do you think you will wait for more attractive levels for Maruti?
I think it depends. I mean, if you're willing to take the timing risk, and as I mentioned, the auto market's going through a period of reset in the near term. I think if you're willing to take the timing risk, then now is not a bad level at around 20 times forward PE. Maruti's can generate 15 to 20% sustainable earnings growth going forward, I mean, sure, you can wait and get in at a much potentially a cheaper price. But right now, I think if you're willing to take a few months of timing risk, I think it's now is an attractive level for Maruti.
Okay. Fredy, hi, good morning. Thanks for joining us on the show. I also wanted to ask you your view on the NBFC space, because you do have some quality names like Bajaj Finance on your list. This space has been through a rough time over the last 5 or 6 months. You think the worst is over?
Sorry, could you repeat that question again?
Sure. I wanted your thoughts on the NBFC space, because you do have names like Bajaj Finance, HDFC, etc. in your list. There has been a liquidity crisis in the NBFC industry. Would you be concerned about that, or do you think the worst is over?
I definitely think the worst is over. I think a lot of the liquidity crisis obviously stem from the Ireland and FS issue situation. But from the companies that we've spoken to in the NBFCs, they are unanimous in saying that a lot of what's happened is largely behind them, and it's in the past. And I think that going forward, most of these NBFCs are much better capitalised. They're much more prudent with the way they conduct their business. I think going forward, they're going to be quite attractive as well. Names such as HDFC is one that we've liked for a long time, and a good high quality company, a good management, strong execution, well capitalized. It's growing consistently at 15% earnings, and that's those are names that would be structurally positive on.
From the list that we have of the Ellerston India Fund, they all appear to be nifty companies. I mean, you seem to have Reliance, HDFC, Infosys, HUL, TCS, Bajaj Finance, Axis Bank, L&T, ICICI, Maruti, all nifty companies. Are you looking at the mid-cap space at all? And if yes, what kind of stocks?
I mean, we are doing a lot more work on the mid-caps. We are very aware that large caps outperformed mid-caps by the tune of 25% last year, and even to start this year, large caps have outperformed the mid-caps. And historically, from my understanding, the mid-caps have never had 2 years in a row of negative returns or underperformed the large caps 2 years straight. So we're definitely doing a lot more work in mid-caps, but our portfolio is focused on high quality, good growth stories. So going down the market cap spectrum, the companies that fit that our investment process and that criteria is a little bit harder to come by, but we're definitely doing a lot more work, and we're looking at names in particularly the consumer and financial space.
No PSU bank in your portfolio? It's a bit surprising, because it's an under-owned space, and we've started to see quite a bit of buying over the last 2 or 3 months.
So you're talking about the state-owned
banks? Yeah, the state-owned banks.
Yeah, so I mean, we have a preference for the NBFCs over the state-owned banks, simply because we believe the NBFCs over a long term will have much better growth. A lot of these NBFCs, one particular thematic that we really like in India is the underpenetration of mortgages in India. So, for instance, mortgage to GDP, debt to GDP in India right now is around 10%, and when you compare it to, the debt to GDP levels back home in my country of Australia, which is 120%, there is a long runway for loan growth over the coming years, and I think that the NBFCs are well placed to be in that position.
Okay, I also wanted your thoughts on Reliance Industries, because that's one of your top holdings as well. This is a time when Reliance has been gaining a lot of market share, especially with RelGeo in the telecom business. Would it continue to command a premium because of the telecom vertical? And what kind of, target prices or growth trajectory do you hope to see in Reliance?
Reliance is one that we're very positive on. We've held it since the inception of the fund. I mean, it sits in the energy sector in the GICS classification, but by all intents and purposes, most of the growth is coming from the consumer side. We're very positive on the consumer side, particularly its mobile business. The number of ads, the number of new subscribers they're getting into the business it's just absolutely staggering, and we think that that's going to be driving a lot of the double-digit earnings growth that Reliance can sustainably do on a yearly basis, and that's going to compound. And I think at current multiples, we'll be happy to be earning more of Reliance.
Okay. Well, finally, I mean, I'm still trying to elicit some interest from you towards the mid-cap space. Pizza guys, specialty restaurants, do they attract you? Smaller banks, say RBL or Federal Bank, some of them may look at it as the next big guy, entering private banking space. What in the mid-cap space, if at all, you are looking at them?
I mentioned before, I think the consumer and the financials are the two areas we're looking at. Within consumer, I think the leisure and tourism plays look quite attractive. So, for instance, some of the hotel chain names look interesting, either Indian Hotels or SRF. I think both of those names look, they meet the growth criteria, but for instance, Indian Hotels is trading on a very high multiple, and that's something that we just have to get a little bit more comfortable with and do a little bit more work on before we dive in.
Okay. All right, we'll leave it at that. Fredy, hope you have a great conference out there and a good stay in India. Thank you very much for joining us this morning.
Okay, thank you. Thanks for your time. Have a good day.
Good day. Okay, so that's the word coming in from Ellerston Capital, and quite positive on India's consumer and consumer finance story.
Just a tweet from Vijay Mallya saying that happy to see the PSU banks have bailed out Jet Airways, saving jobs, connectivity and enterprise. Only wish the same was done for Kingfisher.
Okay. No, actually, I think one of the things he was asking at the time was foreign capital. I mean, they're allowing permission for FDI, which perhaps, if it had been done earlier, would still have bailed the company. We don't know. Yeah, but a lot of ifs and buts there. We have to take a break on that note. Up next, Kalpataru Power has bought 85% stake in a Swedish company. We'll get chatting with the management to check out what it will do to their P&L. We will also have Prakash Diwan joining us with some long-term stock.